So we had GDP data for Q4 2017 out at the end of last week, and that showed that the UK economy grew by 0.5% towards the end of last year, which was a slightly stronger rate of growth than many analysts were expecting. However, that brought growth for 2017 as a whole to 1.8%, which was the slowest year-on-year growth in 5 years. And when we look at the quarterly profile of growth over 2017 in a bit more detail, it's clear that momentum over the year was much slower compared to the recent past. A big reason for that was because growth in household spending was softer, as the post-referendum fall in sterling pushed up inflation and weighed on households' pay packets. Looking ahead to this year, it does seem like softer momentum has persisted. Our latest growth indicator shows that growth in activity did actually slow in the 3 months to January and flagged a fairly mixed picture across sectors. So on the one hand, we're seeing a fair bit of strength in the manufacturing sector as the low pound and firm growth in the global economy boosts demands for UK-made goods overseas. However, it's clear that consumer-facing sectors are having a tougher time and are really feeling the hit from softer growth in household spending. In particular, our latest retail survey showed that growth in retail sales over the post-Christmas period didn't quite live up to expectations. And certainly that mixed picture across sectors was echoed in the Q4 GDP data that we saw towards the end of last week. So that's a wrap of the latest data. Looking ahead, we do expect softer economic momentum to persist as more subdued growth in domestic demand weighs on activity. However, we do expect a little bit more support from net exports, just boosted by the lower pound and the strength that we're seeing in the global economy at the moment. Thanks very much for listening. For more analysis and insight, please follow the CBI Economics account on Twitter.